year come in just yet. Going to keep an eye on this one. But anyways, yeah, positive reaction here. Inflation, not too threatening. Again, going back to our theme here, right? This is why I will not get bearish on this market. If you had, look, you know what the major crashes, historically speaking, have revolved around? Like I'm talking about 2008. I'm talking about the 2000 bubble, 2020. There was a theme of interest rate hikes going on. It's literally the money printer turning off, right? The Fed is talking about turning off quantitative tightening and cutting interest rates into an economy that is not, in my opinion, cratering. I am a big fan of not chasing, using no leverage. We say it over and over. We're going to hear from Chris Pulver in a second. He's going to be joining me on the stream. We use this expression, cautiously optimistic, over and over and over, because I think it reflects really well, at least my perception of markets. You don't want to be a perma bear. It is like one of the hardest trades in the world to be bearish. There are times to be cautious on markets, but cautiously optimistic means generally don't assume the market's going to roll over just because you're seeing scary headlines. But also, if you are going to be bullish, do so with grace. Don't use leverage. Don't use margin. Don't be an idiot. Don't go far out on the risk curve. And if you get one little hiccup in the market, you're going to blow your account. That is how you do not last in this game. If you want to last in the trading game, whatever your ideas are, acknowledge that you could be wrong and figure out what you're going to do about it when you are wrong, because it's going to happen. We're all wrong at times. Anyways, I'm still sitting in the Nas long. We'll see how that goes. We're going to bring in Chris Pulver here to the conversation real quick. Just a quick heads up. We are doing our Black Friday discount right now. Everything is on super sale. It is our biggest discount of the year. If you're interested in getting 45% off, it is our biggest discount of the year. You can get access to our VIP signals. You can get access to the Edge Finder. You can get access to the stock box. Whatever you are interested in, if you've ever thought about getting our products, today's the day. You're getting the Black Friday discount happening this week. It's our biggest discount of the year. All the information can be found by sending us a direct message, or you can explore our Black Friday stuff. Just go to our website, a1trading.com. Just going to drop the link here. If you want to explore the products yourself, see if they're worthwhile for you, if they would help you out in your trading, I'm very, very confident they will. You'll see pop-ups on their screen. I mean, it is now or never. If you're going to pick up a copy of anything that we offer, take advantage. You get Pulver alerts. You can get access to Edge Finder, Stock Box. You can join our signals room if you want, the Stock Box, whatever you need. Head over to a1trading.com and do some exploration. Get yourself some leveling up trading tools before this week is out. There's your chance. Okay, we're going to bring in Chris Pulver, say hey to him here in just a second. Producer will swap us over, and then we'll get into things with.
Good morning. Say hey.
Yeah. How's it hanging? What are you watching today?
So just talking about the news that dropped today, first thing I looked at was a CME watch tool for the Fed. It just continues to be a massive pivot from last week. Probability is now 84.7. So rate cut most likely coming. I was thinking that this market was heading into a pretty vulnerable window. And it still is. I mean, this window between now and the end of the year, is the Fed, because of the expectation that the markets were getting this December rate cut, was it priced in? Now that it's back on the table, are they going to juice it more? I mean, earnings growth has been pretty solid. Google, as far as the Mag 7 goes, is ripping to all-time highs. I just think there's a lot of underlying goodness in the market, and I know it's still led by Mag 7, but what I don't love is how much debt has been issued. I think I just read this. I have this screenshot. I think in the last 3 months, some of the hyperscalers have issued like $80-some billion in debt, and the most they did before this was like $66 billion. Like they raised so much debt here in the last 3 months. Let me see if I can find this picture. I'll find it. Anyway, it was a tweet. I did have a funny post that I found yesterday. Michael Burry, the man who predicted 50 of the last 2 market crashes, has launched a Substack.
I saw that. I've read a little bit of why he's doing it that way. He's like, I want to get away from all the compliance and regulation stuff, which is understandable. Yeah, I mean,
my thoughts are like, well, if you want to short AI, then you can follow that guy. And again, there's nothing against Michael Burry. It's just like, dude, I mean, if you look at some of the calls he's made since 2008, they have been dead wrong. And I'm not saying that he can't be right, but it'd be like somebody showing up to fix your, internet will show up sometime between now and maybe Friday evening.
Do
It's like
do you know what
you don't know. It's like this could be a nothing. This could be a bubble that it is a bubble, but it's just getting started.
You know what
There's
the
so
problem
much lakes.
here's the problem with being super bearish, Chris. There's nothing wrong with being bearish. In fact, a lot of times, what is the trap of being a bear is that it's actually very logically based to say
Yeah,
prices
for
are
sure.
expensive. There's a lot of euphoria out there. But here's the problem with being a bear. I mean, when it comes to being an economist or someone who's commentating on markets, you can be bearish and be right even if you're early, but you cannot be right in trading if you are early and bearish.
Right.
Because if this market, melts up into the end of the year, and then let's say let's say that you get short and you're like, this thing's rolling over, it's going to crash, but the market kind of melts up into the sunset here and then crashes, you were still wrong and you still lost money, right? Unless you just held on, white knuckle to a short position and got, bailed out. The tricky part about being a bear is, it's logical to say there's a lot of frothy spending going on. I don't know if I trust that they're going to get an ROI. It's going to be hard for Nvidia to earn what is projected to earn. I get it. Like I'm with. It's not that being a bull is necessarily being blinded by what is reality. It's that sometimes the very logical conclusion of it's going to be really hard for them to get that does not mean that market sentiment and general flows of capital that does believe that can happen isn't going to knock you on your butt, you trying to short it, right? That's the difficult part about being a bear. Right now, I think that when it comes to markets, you have all these Mag 7 companies that have so much cash from the last 10 years that they've just been piling up in accounts all over the world, that they're now fully deploying it into this AI stuff.
Right.
So I don't love it either. I don't love the idea of getting frivolously spending and debt-based spending, like the concerns about Oracle. I get that. I think that, it's just a market that has a lot of excitement around it. The economy still seems to be holding up. So dips to me are buyable until proven otherwise. And it's just hard to call the top.
Yeah. And if you look at current price action, again, forgive my my charts because they're a little messy. I thought it was eerily similar from last Thursday's sell-off on Thursday with Nvidia to October 10th. So I almost wonder if the market just needed, and it's staggering that it could be that fast to see this type of de-risking and deleveraging in a one-day event. And that's what happened on October 10th. We rallied up to all-time highs. It happened on November 30th. Are we going to use that as a buy the dip opportunity? Now, I do think that what happened after October 10th was 1, 2, 3, 4, 5, 6, 7, 8, 9 days of indecision until we finally broke the highs. So as we're approaching this week trading with holiday trading is a little different because it tends to be way less volume, and there is kind of markets get set in motion and stay in motion through the holidays. So, I mean, I don't know how liquid things are going to be, this week into Thanksgiving. We have limited trading hours on Friday. But if it's an inside, if this is a major bar that's going to be seen as structure, then we might go a whole lot of nowhere for the next couple of days. I mean, it's Tuesday. We have today's trading and Wednesday's trading, then Thanksgiving on Thursday, limited trading hours Friday. So it wouldn't shock me if we're still trading inside of the November 20th candle by the end of the week. All that changes on Monday when it's back to full trading and wrapping up the month of November, getting into December, getting our first print for, I don't think non-farm payroll comes out in the first Friday. It's going to be after the Fed report.
That's right.
The FOMC in December. So all
December
the data
16th.
stuff is coming in. Yeah, weird times for December. But anyway, watch the structure because it was crazy. Yes, this candle was a little bit higher and a little bit lower, but it didn't go anywhere. This candle and this candle are nearly identical, and now we're trading inside of it for the last 2 days. From this morning, I mean, futures market is flat. Yesterday it was up. That's S&P futures, NASDAQ futures down 0.25%, Dow futures flat 0.03, Russell up 0.31. VIX has retreated quite a bit. I mean, you saw this in Pulver alerts last week, Nick. Like, I sold a lot of premium last week, and I had some really good. I really was happy with, like, wow, I just threw together like $1,100 in premium on trades that are like 99.5% probability. I literally, if I'm owning, it'd be Google, which is one of the hyperscales at all-time highs. And I think that with Gemini 3 just dropping, it's showing like, you know, they're competing for like the Chat GPT space. I think that Google could be like one of the winners over like, you know, I mean, everyone loves OpenAI and Chat GPT, but it's like Google's like, nah, we got this. We'll do
Look
something.
at this. I mean, Google's gapping up again, almost 4% here today. This thing is a beast. This company is, and you know, here's the thing, right? Google is up today. Nvidia's down, and down 4.75% here in the pre-market. You got a good move to the downside here going on with Nvidia. I think actually these two things are related. I believe there's some of the Google hype is actually at the detriment.
It's pulling some Nvidia run, like Nvidia loyalty, I guess.
Yeah. And so, you know, I think when it comes to, you know, Google itself, it got so slept on this year, and the reversal has been absolutely remarkable. I owned Google for some time. I let it go too early, but if it dips, I'm a buyer on that stock again as well. I mean, I don't know. It's a tricky circumstance to try and say where this market wants to end. And something you said earlier, Chris, I want to talk about too. You mentioned that, you know, the Fed is cutting interest rates into a stock market that is up, which is true. But I also think that the Fed is looking at it from the sake of the consumer and some of the stocks that have not been so loved, right? You have like obviously the Mag 7, but then you have other things like consumer goods, restaurants, consumer staples, consumer discretionary. Those ones are not doing great. So I think that the Fed is actually to the benefit of the Mag 7, who will also continue to love the idea of rate cuts. I think a lot of the underbelly, the you know, areas of the economy that are hurting a little bit more, is, you know, they're kind of the ones that are getting the rate cuts from, right? That we have slowness in the jobs market, parts of the economy that are showing signs of weakness. And this is why it's difficult, right? Because a lot of people are like, how can you possibly say the economy is good? Well, it's so bifurcated. It is good from its output source. It's not so good for everybody, right? It's not great for people who are on the lower end. It's not good for people who have not been asset holders during this time of massive, you know, upward trends in asset prices and real estate and all that. But it has been pretty dang strong from an output of the U.S. economy. I saw the Atlanta GDP now forecast is for 4.2% growth in the quarter. Now, again, that's really strong. It just feels like gaslighting because for a lot of the economy, they're not feeling that, right? And to be fair, I think we need to see the full participation of the full economy, because I don't think that will go on forever. If you don't get the full participation of the rest of the economy at some point, I do think it will become a bigger problem. But I don't think it's necessarily doomsday tomorrow.
I agree. And you know, technically speaking too, with that candle from Thursday last week, we're trading inside of that. Yesterday's close, we just regained the 50-day moving average.
Yes.
But because it's staring at a giant candle in front of that, I'm not quite saying the coast is clear. I still think this is a vulnerable window. And honestly, I posed this question yesterday for somebody did a session with. I'll ask you the same thing. If this market for the remainder of the year is up here, does that make you more bullish? Or if the market was down here with a correction, would that make you more bullish?
In terms of
how you want to position for it.
Yep. So if I'm looking at it from a trading perspective, I like the first scenario because I like that momentum trade.
Okay.
But if I'm talking about like actually pulling out my wallet and buying stocks that I like, definitely the second one. That 200-day moving average for me is a simple indicator that I've used for many years. I know you too, Chris. I mean, you give me that discount, then I'm going to start buying stocks that I like and actually investing. I have not really been doing a lot of investing this year. I've been doing a lot of trading, but investing wise, you know, you give me a 200-day moving average pullback on S&P 500 and I will almost certainly go shopping, because as long as the economy, and I've said this too, Chris, one of the simplest indicators in the world that I've used the last few years has been we haven't had some sort of sharp drop in GDP or sharp rise in unemployment rate. And that's one of the simplest things. It's like people get so worked up. Oh, you know, rumors about DeepSeek and you know, the carry trade unwind and all these things have come across and been thrown at this market. And yet those simple economic reads have continued to suggest, hey, it's not impacting the hard data just yet. And by being patient enough to watch the hard data, it's actually been a very solid baseline for the last few years.
Yeah, and credit spreads aren't budging. I mean, credit spreads are still tight. This is HYG. You can look at JNK, LQD. Nothing out of the ordinary here. I mean, when you have like a credit type event, everyone's talking about the cockroaches. They came up, with private equity stuff. Private equity is going to stay private. Like they don't want to go public. They want to keep it where they don't have to go mark to market. And unless this is, dropping aggressively, there's really no credit event. If this is LQD, same type of thing. This is going back up. JNK, this is going back up. Like that's the sign of like, okay, so there's a little fluctuation here, but this does not raise any alarms of like, this is a liquidity event. It's not. Well, I listened to an interesting session last night on Mondays. I'm usually on the road for a couple of hours. And, I do think that the Fed easing and rolling off a lot of the mortgage-backed securities, it's not going to feel like the typical stimulus that we've seen from the Fed. It's not going to feel like a true backstopping, especially when we have like such aggressive fiscal policy. But the Fed is still going to support the train that continues to run. I mean, fiscal dominance is global right now. It's not just U.S. And I do think in another place, international stocks might still do well compared to U.S. I think if the U.S. is, and we've said this all year, if the U.S. remains stable, that's a good thing for the global economy. But here is a yearly chart of everything non-U.S. Here's a good look at like a non-U.S. ETF. It's up 24% year to date. And I know there's certain ETFs inside Europe that are up like, 60% for the year, but I'm talking, okay, give me a basket, give me some China, give me some India, give me some Asia, give me some anything non-US. And, Brazil's up this year, Latin America's up this year. And I'm not saying that's where I want to park a lot of money, but I'm saying that as far as global liquidity is a good thing. And I think the US is not going to take away that punch bowl. I think the US will just keep, we'll say fanning the flame, if you will. Because at some point, something has to turn. Like there will be a point where we want to grow, but there will be a point where we can't. There's going to be a point where these law of large numbers is going to be very, very difficult to keep hitting these like price to perfection earnings. I mean, we're in the top 1 percentile of evaluations right now. Yep. And I'm not saying we can't go to all-time highs, but my gosh, that's really scary to think we've never been this overvalued before. And what do you think comes with that? Probably a correction, probably some lackluster returns. But anyway, go back to where we are at right now and go back to the daily chart. I'm basically right now, I am strictly like 0 DTE to weekly. Like the trades that I'm doing right now, I'm just going to look at some simple income trades. As an investor, I mean, if you've seen some of the Pulver alerts I've done, they are so out of the money. They are so far away that that's where I'm going shopping. Like I'm literally going shopping, 30%
playing a little
deeper, 50% lower from here. And you know what? If the market's going to, number one, if nothing happens, it's just income. It's just income. I keep like stacking that up. If something does happen, I am so braced for downside that there's plenty of forgiveness for me versus like I'm invested at these highs and this market has to go higher. Here's an example. Somebody that is a, former hedge fund manager, market's down 3 to 4%. He's down 35%. I'm like, the hell, dude? Like this, but he's heavy in Bitcoin. So there you go. I mean,
that's what I'm wondering. I mean, that's the nature of this market. That's what makes me a little bit nervous. And it is the amount of leverage that is out there in the system. However, here's a counter thought to that I just thought of on the spot here. If everyone is that over leveraged, is it also potentially fair to say that a move like this may be all you need to unwind that, right? If you're talking about like, if everybody's super heavy on the leverage side, couldn't there also be the very quick flush like we may have seen? By the way, this candle, part of the reason I took this buy, Chris, I don't know if you saw this stuff. I know you're a junkie like I am, but I watched a bunch of stuff and people were talking about, this candle has only occurred a couple times in market
3 times in 30 years, dude.
Yep.
Yeah, it was the biggest, like 1.5 up to 1.5 down. That's only happened 3 times in 30 years.
And it's historically been one of the better kind of follow through upside moves afterwards.
Yeah.
And it makes so much logical sense because I, like everyone else who is invested or long anything, that day where just if you weren't long stocks or long equities or long risk on whatever, just imagine this for a second. You start out the day, NVIDIA earnings are excellent. Oh my gosh, we are back, baby. And by the end of the day, your account is absolutely devastated.
It was a crazy day, man. It was.
It really was. And so that, from a psychological standpoint, creates in just an absolute FU way, right? This is just markets 101. Now that they've completely scared you, it's like, oh, now the market goes back up. So
and puts got absolutely smoked because the VIX goes up to 28 plus. Everyone's buying puts. We had like the put call volume or the put call sentiment was insanely lopsided, favoring puts. Like everyone's just loading up on hedging. And it's the perfect time to just flip it. That's what I'm saying. It doesn't take much. I've never seen the market feel like it's properly deleveraging itself in one day. I've never seen that before.
Check this out.
We basically had it twice.
So if I just switch my screen over here for a second. Sorry, I'll let the producer do it. So check this out. Bitcoin put call ratio shot up like crazy here recently. This is another thing where another reason I think that this market, at least maybe trying to short-term bottom out, maybe for the holidays, maybe just for a little bit of time here, maybe even go sideways. I don't really, know that we're going to have just a straight shot through the all-time highs. Yep. But part of the thing that we've talked about many times and why I can't really justify getting incredibly bearish, I do like some aspects of the rotation trade. I like the idea of potentially being a little bit more defensive. You sound like you're in the same camp with international stocks. I know you're interested in energy right now as well. Right. It's like there's that rotation potential, but the idea of getting outright short and bearish this market, it is the popular thing to do. Like, understand the popular thing right now is to go out and chase puts and get bearish this market, just like it was in the lows of April. And so I think it's a really dangerous mentality to just sort of be like, AI bubble. And I mean, you are literally like, you are reading off the headlines and deciding to be bearish. Like, that's what's kind of been the theme here. Not to say it can't go lower. It's just the idea that, okay, the risk reward here to being a bear to me does not look super good, because if this move that we're seeing in markets is, like I suspect it is, a deleveraging type of move, deleveraging types of moves are types where you get V moves, right? Where you get everyone kind of piling into shorts or getting unwound, getting liquidated in their accounts. Well, then fresh money comes in and they're like, oh, your pain is my gain, and buys it and shoots it back up. That's happened several times in recent years. Maybe it won't happen this time. Maybe it'll be different, but that's my concern.
Yeah. And I mean, it's only, it's been fair. It's like, we're just shy of a peak to trough of 6% from this recent correction. Take that. So the Friday low is slightly lower than that Thursday close. So I think it was like 5.87 here. 5.79 was our high to low. 5.79 S&P is not like a slouch pullback. That's pretty decent. Considering we spent this entire year having like less than 2%. So, 6% or so is pretty commendable. And then the NASDAQ was a 8+%. We must have had a 9% correction from peak to trough here.
Yep.
So, I mean, those aren't nothing corrections. I mean, that was 8.82. So enough, I would say, a 10 to 15% correction kind of, maybe backs the truck up a little bit more on like, oh, this could be a great V bottom versus like 5%. And, again, it's a vulnerable spot. I think that these candles matter. Today with futures being pretty flat, I'm just going to watch. I think we're looking at potentially, if we're opening flat today, it's like, as long as price holds above 6,700, we have room to drift. There's still some inefficiency from that big sell-off on Thursday last week. So could we come up to like 67.30, 67.40? Yep. Could we come back up to the top of this candle? Yep. If we stay inside of it through this week, it wouldn't surprise me. And then really next week matters because it's another full week of trading. Keep an eye on the Fed watch tool. I'm just going to look and see where positive flows are at. If everything is positive gamma, that means that there's put volume coming in to sell, to stabilize the market. And it's just going to be that melt up. And again, another instrument is watch the VIX. The VIX up at 28. It's like, watching this thing rip from 19 to 28 in a single day was kind of nuts. But if we retreat to go sub 19, all of a sudden we're back to like an 18 or 17 VIX. That is the kind of the noise the market needed to clear. It's like the brush fire was contained, and we retreat back down to like a little bit. I'm not going to say like 17 is the normal VIX, but it certainly is a lot different than elevated 20 plus VIX.
And Chris, that play, I mean, just to congratulate you, that, I mean, selling premium last few days, it's been a really nice trade. And I think that was, I mean, obviously with hindsight, really the right call. I think when you get up into high 20s in a bull market, right? Again, innocent till proven guilty. Those are VIX rallies that I if I'm long stuff, I close out. I took profits on all my VIX stuff for now. You know, if I get a super low drift in the VIX, you know, we've talked about that before as kind of a low cost way to hedge. If you get that rebound to the downside here in the VIX, then I'll probably buy some VIX calls again, just as a bit of defense in the portfolio. But yeah, I mean, I think that was the right call. And I just want to show just a technical outline just to marry up with what you were saying here about S&P 500. So here's the thing: when it comes to this move, I think we've beaten it to a dead horse in terms of the moving averages. You got that 100-day moving average. You're coming back up into the 50. Long term, you know, you're hitting support levels. You're still intact for a longer term uptrend in the bull market.
Yep.
You asked the question, if we did get that lower low, that push down.
That's a neckline break if we get it, though.
Yeah,
it's concerned. Yeah.
That's where I switched from being a trader on the long side to a little bit more like, okay, what am I interested in buying and being okay with a significant drop below the 200? So
correct.
That's a little different. That's different for me in my own, you know, approach. I think you think of it differently as, okay, this is still, you know, wave up, wave down, wave up, wave down. Like we could still be in that kind of structure. Yep. But I think if you get, you know, wave up, wave down bigger, it's a change of structure. So I agree with you on that. I think that in terms of where we are at, though, 100-day moving average, really strong reaction to that area. Feels like some sort of liquidity sweep, whatever you want to call it, right? A liquidation event, I think, in the crypto space that we've been talking about. I think what may also be worth watching for traders as we go into Thanksgiving week, understand that you are talking about it's one of the most, if not the most, seasonally strong periods of the year. And I want to address this really quick, because if we talk about full year seasonality, take a look right around this time, late November in Thanksgiving week, low volume week, usually not a lot of economic data in the back half. Historically speaking, it's one of the most positive drift periods in the stock market. Now, somebody on my channel yesterday, they commented, well, Nick, everybody's expecting it this year, so it's not going to happen. And I fired back and I said, well, maybe it will happen because everybody's expecting it to happen, so it won't happen, so it will happen. But you can play game theory all day long.
Spot on.
Yeah, right. You can always play game theory, but seasonality is what it is. Think of it however you want. But seasonality is a real observable thing and force in markets. It does not guarantee we're up by end of week, but it tells you, historically speaking, we have been during this time. So I think that in combination with a 100-day holding this area, strong rebound, that candle, which we talked about, is an incredibly, historically speaking, bullish type of candle. And then finally, the thing I'm looking for from a technical breakout, draw your fibs from high to low, that pullback that you talked about on SPX, about 6% or so, 5-6%. If you get above this 61.8% retracement, I think that's where a lot of bears would throw in the towel, and you are looking at kind of a pushback to all-time highs. If that doesn't happen, if you break to the downside, we reverse that thinking and we say, okay, yep, bears are really strong.
Yeah, while you have the chart, go back to 2024 and just look at how November to January played out.
2024 November. Yep.
So I could see this year's price action playing out in a similar way. We had like a big gap up, and it just kind of put the market in motion, but it just stayed sideways. We were up, we were down. We had 3, 4, 5% corrections, but you know, we hit all-time highs in early December. We hit, you know, we had the Fed kind of botched the Santa rally, and it was a huge one-day sell-off, and they came right back, and then we touched the lows again, came right back. So maybe between December all-time highs back into January all-time highs back into February all-time highs, it's like that's maybe what we're dealing with. Now, I'm not saying the market's going to roll over in 2026, but it's like I don't know what else the market is excited about to like keep pricing in all-time highs and keep grinding through all-time highs when, you know, market breadth is still really bad. The small caps still haven't had, you know, much of a catch-up trade. RSP is like pretty trash right now. It's like we're not at all-time highs in equal weight. So that's my concern, is that we don't have like the real the real growth in equal weight. We don't have the small caps. And so, like, to me, the risk on is not quite there. I think that we have market cap weighted, like with Google going to all-time highs, whether NVIDIA is down a couple percent here and there. NVIDIA, by the way, with earnings, did exactly what I said. The contained move is about $12 to $13. It went up like 10 and it dropped about 10. And it's everyone that's long NVIDIA, everyone that's short NVIDIA got toasted. And that's like a classic earnings trade, like since that candle on Thursday. So even though it was a wild day, it was a gap up and it filled. It's like market makers had a field day with just like selling premium on top of that move.
Yeah, that was an option seller's dream. You had tons of implied move and then just a wick back and forth. So yeah, really crazy stuff. Chris, we're out of time here. We gotta hop off out of here. But just a reminder to everybody who's listening, Chris Pulver and we both share our trade alerts inside of our VIP service. If that's something that you're interested in, you get access to Pulver alerts to get his trades, or our VIP room to get access to mine, or you can bundle both of them. If you need help with that, we've got people standing by that will help you set that up. They can get you 45% off our VIP memberships or access to Edge Finder. You can bundle it with Pulver alerts, VIP, whatever you want. If you've ever thought about joining Chris and I inside of the Discord or getting access to some really powerful tools for your trading analysis, don't miss your chance. It is our supersized discount happening right now. Click this link to chat directly to a member of our support staff, or scan the QR code right above me for some extra special secret discounts. Chris, thanks for coming on, man. We'll see you next time.
All right. Thanks, Nick.
See ya.
Bye.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well on this Tuesday. So I don't believe we're going to stream on Thursday and Friday because it is a US holiday. So let's try to squeeze as much charts and analysis as we can today and tomorrow, which is going to be Wednesday. The main thing I want to mention right now, which concerns the dollar, is the sort of corporate buying of dollars at the end of the month. So if you have been following my streams, you would know that there is a seasonality phenomenon where usually the last week of the month, dollar goes up. Why does it go up? Because the big US companies, they sell stuff. So Apple, Microsoft, Netflix, Nvidia, they sell products all over the world. And they receive the yen, euro, pound, Chinese yuan, blah, blah, blah. So they need to exchange all of the foreign currency for the US dollars. They usually do it at the end of the month. What does that do to the value of the dollar? Of course, it increases the value of the dollar, right? That is how market mechanics work. Also, if we squeeze out the chart a little bit, let's say the monthly chart, DXY, I would say overall we were in an uptrend massively from, let's say, 2008. And this is, of course, or could be because the US companies have been doing extremely well in the past decade, especially the technology companies. So that is how the money flows. And usually it is an end of the month phenomenon. It's not just about exchanging foreign currency for US dollars. There's other flows as well, because some companies do buybacks, some companies invest into the stock market. So it's a lot of money flows, but it's all positive for the US dollar. That's what you need to know. This daily candle today is looking bearish. So it's looking pretty large so far. It's looking pretty bearish. I wouldn't say any structure has been broken yet. I would say we are still respecting the trend line on the DXY. we could be stuck at some resistance. So this could be a pretty significant resistance level, but I would say still the path of least resistance, at least until the end of the month, should be to the upside. Okay. One thing I'm worried about and one thing that I'm considering is this. So Fed Watch 2. So the meeting is on the 10th of December 2025, right? That is when we will have the upcoming meeting. But there's most likely going to be a rate cut. So if you look at all of the Fed members and you put things down on a piece of paper, most of them seem to be dovish. Most of them seem to be for a rate cut in December, even Powell. Okay, even Powell. And if Powell makes a decision about a rate cut, he's going to have 3 or 4 members just follow his move and vote for a rate cut as well. Now, that could be a bit bearish for the dollar. I think the dollar has had quite a good run, especially from the 17th of September. So I may flip to short-term bearish on the dollar in December. I do have my USD CAD position, which is running some steady profits. So my plan is to maybe exit this trade pretty soon. I'm thinking about it. I know I mentioned I'm going to be holding it for 2 to 3 months, but again, I've kind of decided to rethink the position and possibly take profits and maybe get in a bit lower. So maybe we can get a correction and then I can get in at a bit of a better level, a bit of a lower level. That is something that I'm thinking about. Of course, if I make a decision, you will get updated. So you will get updates in the A1 Trading Discord. Of course, if you want to join the A1 Trading Discord, we are running a massive sale. You can get, I believe, 45% off with this discount code right here. So if you want to get the signals, if you want to talk to us, so work with us, trade with us, make sure to join the A1 Discord. As far as my other positions, I have Pound Aussie, which has just been stopped out. So looks like I took a loss on this position. Unfortunately, I still think it was a pretty good position. Fundamentally, it was bearish. Technical analysis, we were in a downtrend. So I'm still happy I took it. No regrets, as they say. With an A, no regrets. Yeah, so out of this trade now, took a loss. NASDAQ seems to be pulling back a little bit. SPX kind of break even on the day. No real massive movement on the SPX, so we will see what will happen. But that is my current watch list. So I'm looking to buy the NASDAQ. I'm looking to, of course, I'm out of the Pound Aussie, so this is going to fly off the watch list now. And I'm looking to do something with USD CAD. Maybe close it, as I mentioned, right? That is the game plan. Bitcoin and Ethereum are still crashing lower. So crypto is still in limbo and just printing red days overall, approaching the level of support around 76. I think this is also the break-even price for MicroStrategy, for Michael Saylor. So his company, MicroStrategy, basically holds a bunch of Bitcoin, and the value of the company closely follows the value of Bitcoin. And he has been steadily buying Bitcoin with the company's money. So essentially, if you invest in MicroStrategy, it's like you bought Bitcoin, but you're getting a far worse deal. You're much better off just buying Bitcoin. Anyway, that's a very interesting company to watch. So MicroStrategy, MSTR, that's it. See? So MicroStrategy has been crashing drastically lower. It's going to be very, very interesting to follow the price action of this company because, again, heavily dependent on Bitcoin, and Bitcoin has not been doing well. So if you look at Michael Saylor's dollar cost average price for Bitcoin, I think it's around 70K. So I think this is his break-even price level. So if the price reaches this level, he starts to be in some major trouble, I would say. It has happened before. I think in 2022, the current Bitcoin price was below his break-even price, and he managed to pull through. So we will see what will happen this time if we get another crypto winter. That's definitely going to be interesting. Looking at the Forex factory calendar, let's see what we can spot right here. So, inflation print, what happened? Well, we actually got a bit of a lower inflation number. So the actual number was a bit lower than the forecast. That's for the core PPI. PPI month on month came in pretty much as forecasted. So I would say a bit lower inflation than expected. Yeah, a bit lower than expected. If we look at the Edge Finder, we should be able to find the PPI. Let me take a look. So inflation, PPI year on year. Let's see the year on year. Okay, so the forecast, but this is for September. The last PPI number was lower than the forecast. So it came in cooler than expected. And this was for... this was for October. Okay, so this looks to be for October, if I'm not mistaken. Yeah, should be for October. You can correct me in the comments if I made a mistake, but I believe this print is for the month of October. Now we have some Aussie news. So the Aussie CPI, which is coming up in a couple of hours. And then we have the New Zealand cash rate, New Zealand interest rate decision. That will be also pretty interesting to watch. We have the UK budget tomorrow as well. That should be pretty important. So if you have been following the story in the UK, they have major fundamental trouble. Unemployment rate, GDP, inflation, it's all looking pretty grim. Okay, it's all looking pretty bad in the UK. Now they are discussing the budget for the upcoming year, I believe. So we will see what they will do with the UK budget. If there's any important updates, I will, of course, make a post in the A1 Discord. We have the claims, unemployment claims on the dollar tomorrow as well. I don't think it's going to be a massive market mover. And we have some CAD news, which should be pretty important for my USD CAD position. So we do have the CAD GDP, right? So the CAD GDP, we will see what will happen with that. Again, if I close it, I don't think I'm going to close the trade by that time because that is still the November 28th. And the corporate buying of US dollars should end, let's see. So how many days do I have? Until the 1st of December, so a couple of days. Let's say until the end of this week, I maybe should close the trade by the end of the week. I think that would be the right choice to do. So let me see what you guys are saying. Hey, Tato, Alessio, Bertie, pound, dollar. Okay, sure. Yeah, we can do that. So GBP, USD. Let's take a look. On the daily, of course. I mostly focus on the daily chart, if I'm being honest. So pound dollar on the daily chart seems to be in a downtrend. I'm definitely bearish on the pound, and I'm definitely more bullish on the dollar than on the pound. So I do think that the dollar should win over the pound. We do have that UK budget, as I mentioned, tomorrow. So autumn forecast statement, we do get that news. But I would say fundamentally I'm bearish. Technical analysis, we are in a downtrend. So I would say we are bearish as well. Looking at the top setups page for GBP USD, bearish. So a bearish score as well. Not a bad trade. Not for me. Okay, not for me because I'm expecting in December, as I mentioned, possibly some dollar weakness. I do think the Fed will cut interest rates, which could have a bit of an adverse reaction on the dollar. But for the pound dollar, not a bad trade. It's below the 20 MA. Again, not financial advice, but if you get in on a sell setup here, I think there could be an okay trading edge behind it. Okay, so not a bad setup. Joshua, hey Marco, how are you doing? I'm doing pretty well. Hope you're doing good as well. Welcome to the stream. Hey Marco, did I miss the gold part? No, I still haven't done gold. Why don't you set and forget? Well, I like to actively manage rather than just set and forget. I think I do get a bit better results by active management. And sometimes I can squeeze out a lot of percentage if I use a trailing stop loss instead of a fixed stop loss and a fixed take profit. So if I see the price rocketing higher, or I'm fundamentally inclined to see the price trend, well, then a trailing stop loss is a much better decision. How's the euro doing? Economic heat map. Yeah, we can take a look. Let's see. So, well, it's looking kind of bearish. We have 33% of the data is coming out worse than expected. So that's interesting to see. Although I'm not looking for any setups on the euro. I think also euro dollar looks a bit flat, if I'm not mistaken. Yeah, it just looks a bit flat. I would prefer, of course, taking a trade on the pound dollar. Now, for gold and silver, I almost forgot. Gold and silver. Let's... I just got taken out of this position with this wick, and now it's continuing higher. Oh my god. That's a bummer, but just a part of the game. So as you can see, I had a position in. Plan was to trail my stop loss. Unfortunately, I got taken out, and now the price does seem to continue higher. Fundamentally, I'm still bullish. So I still like silver. I still like gold. And I would like to be a buyer. But since I got taken out, I decided to wait on the sidelines a bit and be a bit more patient. Why am I bullish? Well, because I believe inflation is going up. I believe inflation is going to continue to be a problem. It's already pretty hot in the US. CPI, dollar. So rising inflation currently at 3%. That's pretty bad. And again, more spending will be done in 2026. More printing will be done. That means inflation just keeps on trucking higher, and things like gold, things like silver continue to go up as well. An interesting story is if you were buying a house in the 1970s and that house cost 1 gold bar, let's say, that same house, you can buy that same house today with the same gold bar. So real estate and gold have both drastically gone up, while the value of fiat money, like the dollar, the euro, the yen, the Chinese yuan, all drastically went down. So having your money in the bank or holding cash is the worst thing you can do. You're losing money every single year. And it's not just a couple of percent. Yes, inflation could be just 3%. But guess what? That is not the real inflation. You don't know how much money they actually printed inside of the system. It can be around 7 or 8%. Okay, it can be around 7 or 8% inflation. With all of the printing that's going on, with all of the government spending that's going on, it can get really crazy. So the best chart for inflation, I would say, is actually the price of gold. Look at this. This is your inflation, pretty much, on a longer term scale, on the monthly chart. This is your inflation. See, especially if you're looking to buy a house. If you're looking to buy a house, you have no chance. If you're holding cash, no chance. But if you hold the metals market or you hold stocks, well, then 10, 15, 20 years, you may actually be able to afford a house. I do want to take this time to mention the sponsor of today's video, which is going to be DNA Funded. So if you're looking to expand your trading capital, get more capital, definitely check out DNA. There is a discount code, 25% off with the code A1Live. Okay, so specifically for you guys watching the streams, A1 Live gets you 25% off any of the challenges on DNA. This is my personal 50K challenge. Current equity is $54,093 or $103. So I'm pretty close to passing phase one. This is the equity curve. So hopefully by the end of the year, I would pass phase one. Currently have open 2 trades, $euro buy, S&P buy. Profit is 318 on $, 115 on the SPX. Pretty close to the profit target, as you can see right here. So I just need $900 more, and then I'll be set. By the way, this is the challenge of trading with signals from ChatGPT. So once per day, I take 2 trades. The signals come from ChatGPT, and these are the current results. Doing pretty nicely, if I may say so. I tried cleaning my silver using home products and I ended up tarnishing it. Oh, well, that's too bad. Maybe you should just sell it. And actually don't sell silver because it's much better than holding cash. So maybe you can sell it and buy an ETF. Who knows? Just kidding. Use vinegar. Yes, so you can try using vinegar or bird poo. So bird poo says try using vinegar. Ball out. Hey, what's up? DXY. Okay, sure. I did bird. I was told you did use bird poo. ICT saw your position and asked his Enigma to stop loss hunt you. Probably. So I've had some beef with ICT before. So he may be screwing with my stop losses. Cadien, hi Marco, watching all the way from Africa. What's up? Welcome to the stream. If you have any questions, put it in the chat. So DXY was the first request from Ball Out. DXY pulling back today, red candle. I would say, as I mentioned, the current structure is still untouched. The trend line is being respected. We are stuck at a bit of resistance. And until the end of the month, I am bullish. So because of the corporate buying of dollars, I'm bullish until the 1st of December. Then I'm considering a possible pullback because a rate cut is most likely coming. So the Fed is most likely going to do a rate cut, which could give some bearish price action. I think we're also getting future projections, if I'm not mistaken. I do believe we get future projections as well, which is really important for 2026. And if they come out and say that they will do a lot of rate cuts in 26, like you have in the Fed Watch tool by the end of December, so the rate should be around 275 to 300. So if the future projections are super dovish, I'm a bit worried that this thing pulls back. So yeah, I'm considering prematurely closing my USD CAD position with a market take profit. So just the general market close. But I'm not going to do it yet because, again, corporate buying is happening right now. It is a monthly seasonality thing where at the end of the month, big corporations exchange a lot of foreign currency for US dollars. Marco, you know what day it is today? Taco Tuesday. Yeah, it is Taco Tuesday. Now you had beef with the goat of trading. Unfortunately, yes. So now I'm paying the price for it. He already took me out on silver. Right there, let me show you. So ICT already took me out here, and he already took me out on pound Aussie just now. USD CAD he still hasn't touched, but on Bitcoin he also screwed me over. Let me show you that right there. So maybe I need to get back into ICT's good graces, as these recent couple of trades haven't been the best. If you're seeing this horrendous low, ugly looking thing at strength, then trading is not your thing. Marco told the gold bar story again, gave me a big deja vu. What about the NASDAQ? Yes, sure, NASDAQ. So I don't know. I tried a risk on position. Okay, I tried a risk on position on Bitcoin. It didn't work out. It got smashed. Fortunately, I had limited risk on the position. I know Nick is in. I know Nick got in at around 2400 because it was a signal in the A1 Discord. It's running pretty nicely now. I didn't want to yet get in. I am bullish. I'm not calling for a crash. I'm just calling for a bit of a pullback. I am overall 100% bullish. I would just like to see this go a bit lower, maybe to 2300 or touch the 200 EMA. So what is this? So maybe touch the 200 EMA. That would definitely be a great entry. Maybe I'm just being too patient. Maybe I'm just being too scared. One thing I do know, if I take a position and it gets stopped out, I'll be a bit more patient. So Bitcoin position got stopped out with extreme strength to the downside, with extreme bearish pressure. So I'm not so happy to jump back in. Although I do think if you got in at 2400, it was a pretty good level to get in. Or if you get in right now, it may not be such a bad level. You're still getting a discount of minus 5.7%. So I would say that is still pretty good, but I would just like a bigger one, both for a long-term investment and for a short-term position. I would like just a bigger discount, 10%. I think that would be pretty nice, pretty healthy. So it all depends on your trading style. I know Nick likes to take multiple smaller positions during pullbacks. And then once he does catch a winning setup, so let's say he got taken out on the first two positions, once he catches a winning setup, he usually has a very, very positive reward to risk, 3-1, 4-1, 5-1. So he manages to pay for all the losses and then make some profit on top of that. ICT is so powerful. I wish someone would kidnap him again for his new strategy. Yeah, maybe FBI can kidnap ICT again, because if I get his strategy, it's going to be an absolute game changer for me and for you guys getting my signals, because we're going to make 150% per year on a bad year. So hoping he gets kidnapped again, but just kidding. Why do they say that day trading isn't profitable long term? I'm slowly transitioning to swing trading because I fear my strategy is just breaking one Thursday afternoon. I would say day trading is definitely profitable long term. Just look at SMB Capital. SMB Capital. They are one of the most successful prop firms. They are a real prop firm. So essentially they employ traders to trade their capital. They teach traders to trade, and they don't stand on the opposite side of those trades. But when a trader makes profit, the firm makes profit as well. What do? They specialize in very short-term positions. I'm talking about 5, 10, 15 minutes, 30 minutes. That's bulk of their trades are day trades that last for a couple of minutes to 1 hour. Yes, they have some swing positions as well, but most of the time they day trade. They make millions and millions of dollars. So it's definitely possible. You can read Market Wizards. There's a lot of day traders and Market Wizards. So it works, but it's very hard. It is extremely hard. Your edge needs to be very good because the fees and commission is extremely high on the 1 minute chart. If you're scalping positions for a couple of minutes, the fees and the commissions can kill your edge. You really need to have a good trading edge to make money, even with the commissions, even with those high spreads. It all depends on what fits your personality. Do you like swing trading, or do you like day trading, taking 5 positions per day? It all depends on your personality, your psychology, and what you can mentally deal with as a trader. If the Fed is really going to cut rates, why the rumor didn't price it out? I'm not sure what you mean by that comment. The Fed have no choice but to cut rates. I think they just say that they might not so that people would sell. I would say they do have a choice. I would say that they are not 100% certain of what will happen because they still need to vote. So the Fed is consisted of, I think, 10 or 12 members, and they get together and then they vote. So even the Fed right now doesn't know what they will do. They first need to have a meeting, and then each of them will make a vote. So once the vote is done, they will know cut, no cut. And then you'll get an announcement, cut, no cut. Does the Edge Finder still show NASDAQ as bullish? Interesting question. Let's take a look. Top setups. NAS. Bullish, yes. COTS are bullish as well. That is interesting. Seasonality is, of course, bullish. I mean, you have the Santa rally. There's no denying that the Santa rally is an extremely powerful confluence to buy the stock market. End of the year, usually stock market goes up. I like day trading, but not as quick as a scalper. I'm usually in a trade for 2+ hours, but I'm always out by the end of the day. Well, if that fits your style, if that fits your personality, if you have a good enough trading edge, I would say stick to it. If you're making money, stick to it. If it's too hard, if you're losing money, change something. Try swing trading. If you haven't tried it before, maybe you will like it. It's much easier. Swing trading is much easier than day trading. Holding positions for 2-3 weeks is much easier than holding positions for less than 8 hours. Hey Sluggy, what's up? Unfortunately, we will be wrapping up the stream right now or in a minute. I'll do the last chart request and then I'm going to wrap up the stream since we have ran out of time. So put it in the comments what you would like to see as a last minute chart request, and then we will take a look at TradingView. What level at Bitcoin would you consider to go long? There's no level for me personally. I mean, if we do have a crazy dump, like to I don't know, to 30-40K, then I'm buying as a long-term investment, or let's say 50K, I'm buying as a long-term investment. But these levels, I'm not going to buy. It's kind of the bearish part of the halving cycle is now, so I don't see any fundamental reason to buy. Price action is super bearish. Yeah, I don't see any reason to buy. CAD yen. Okay, CAD yen will be the last one for today. Let's take a look. CAD GPY. Well, the chart does look super bullish. The yen does seem to be losing strength overall. If I look at the JXY, just a meltdown on the Japanese yen index. I think also the Edge Finder short term will be bullish here. Let's take a look at JPY. Yeah, bullish reading on the Edge Finder. For me personally, it's tough for me to get into a buy position on CAD yen because long term, I think CAD is one of the weakest currencies alongside the pound. Pound and the CAD seem to be the weakest currencies. So this trade is not for me. Also be careful, resistances here. But if you do have an edge, if you're closely following the Edge Finder and you're looking at this technical analysis, you're looking at the uptrend, I would say it's good to take a stab at it if it fits your plan. A nice buy position, it could be nice. So that's about it. Thank you guys very much for watching. See you tomorrow and good luck in the markets. See you.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Happy Tuesday. Hope everyone enjoyed the weekends, got some rest in, ready for a new week ahead. So There's not really much on my watch list, to be honest, at the moment. I did want to just touch on the thing that Marco was discussing about day trading and swing trading, about why day trading stats are primarily negative for traders. Now, there's a couple of reasons. It goes down a whole rabbit hole. I'm not going to sit here and yap about it for too long, but there's a lot of different things. Specifically in FX, you get a lot of pretty much just noise. So you can see a lot of corporate hedging transactions. So if you're trading like a 30-second time frame, a 1 minute time frame, again, this is specifically on FX. If you need to transact I don't know, let's say $1 billion to €1 billion, that's going to reflect on the chart. Now, obviously, that's not going to be all in the market at the same time, at the same price level. But again, it does lead to noise. So there's that aspect. There's also the aspect of generally, it's just very, very hard to find an edge in the markets on low timeframes. However, the last thing I want to say about that is we also need to consider the typical trader that is in these statistics. So you'll see on brokers, 60, 70, 80% of our clients lose money. Fine. But how many of those people are actually trying to trade as a career or do it seriously? I think if you filtered out and separated casual hobbyist traders or gamblers, and then compared it to people like us that are actually, trade either for a living or trying to make it a living or a career or in any way seriously, I think the stats would actually be significantly different. Obviously, not every retail trader is like the people in this stream, unfortunately, but yeah, I think the stats are heavily swayed because obviously the masses are not trying to trade seriously. Anyway, let's move on. LTD, first time here. Well, I hope you enjoy your stay. We're pretty much approaching the end of the stream. I'm the last guest. I would suggest going back to the start and watching it through so you can see everyone's different analysis and opinions. Royal Trades, hello. It's good to see you, my friend. Hope you're well. Interested in learning about options. Do you mentor? I don't trade options and I don't mentor, no. Ugly, no offense, that's how I'm reading your name. Hello, good to see you. Oh shoot, we got James again. Thought the stream was ending. Yeah, no, Marco made that did sound like the end of the stream. That's fine though. Hopefully we didn't lose too many viewers. Anyway, let's get on to the markets. So there's a couple of different things I want to talk about, but again, there's nothing specific on my watch list. I'm actually very flat right now, but I'll move on to that topic towards the end. So last time we spoke, we were looking at the dollar, primarily because we had this double top right here. These are terrible arrows, but there you go. Double top. And obviously we were coming up, breaking this 200 daily moving average. We were breaking above this $100 key level. And the idea was, are we going to continue bullish and basically start a bullish cycle on the dollar? Or are we going to remain sort of within this range that we've had? So far, it seems like we are going to remain within this range, at least for now. Now, again, we've got the 200 daily moving average. We've now triple topped. We're rejecting that $100 key level. And we've got those rate cuts getting priced into the markets or continuing to get priced into the markets, adding pressure to the dollar. So I'm definitely not bullish just yet, or right now at least. So yeah, that's pretty much where I sit on the dollar. Let's move on to the indices, equities markets, indices markets. Specifically NASDAQ, S&P, US markets. So if we've got the rate cuts getting priced in, even heavier than before. So if you check the CME FedWatch tool, I'm fairly sure that's ticked to the upside. The NASDAQ here is trending to the downside as far as I'm concerned. I don't really think there's any way to argue that. We do have these lower highs getting formed. We've also got a bit of an ugly trend going on in terms of the moving averages, but we are crossing from this bullish trend that we had here into a slightly bearish trend. Now, I think that this is a good opportunity to pick up some NASDAQ, S&P, Dow, whatever. Not financial advice, just my opinion. And it's not really to do with the chart. It's obviously we've got the Fed cuts. We've just spoke about that. But it's also the M2. Now, I don't think I've ever spoken about this. And I'm not going to go into it. Google's free. I don't have enough time to fully explain it in loads of detail. But essentially, the way we can think of this is a buying pool. How much money can we buy? Sorry, not how much money can we buy. How much money do we have to buy? Basically, in the US economy. So if we've got more liquidity, so if you compare this to something like the S&P, you'll see when we are coming up, it can generally lead to bullish cycles. Now, it's not something you would look at and say, okay, M2's up, I'm going to buy the S&P. It's not like a one-to-one thing. It's just like another indicator we can use, essentially. So you'd obviously pair this with everything else. So whether it be policy stance, indicators, technicals, whatever, doesn't matter. But it is just one of those things you can layer on. So if you start seeing the M2 come down, okay, maybe you want to just hold off on being a buyer just yet. But if it's starting to come up like we are seeing here, in my opinion, it's a good sign that there's still liquidity out there. Not liquidity in the markets in terms of, liquidity sweeps. I mean, liquidity is in actual cash in the economy to buy things. That's a good sign. So that's one of those things. Then again, we do have, as Marco mentioned, we've got the Nasdaq reading bullish with a score of 8. The Dow's on here as well. I don't think the S&P is there. So the Dow and Nasdaq are the primary choices. So automatically out of those two, I'm going to go to Nasdaq just because I like the Nasdaq a little bit more. Now, again, because this H4 is looking pretty intimidating, in my opinion, for buyers, it's making me a little bit concerned. That's not the right word. Cautious is the right word I'm looking for, on where I would want to be involved. So if we could come down to this support level again, I think that could be a reasonable area to be a buyer, and essentially just do basically what Nick does, which is attempting to be a buyer. Obviously, as long as you've got the reasons, attempting to be a buyer on major levels of support or key levels. So yeah, that's that. It seems like you owe me the coffee. Well, we're not at 160 already, are we? Surely not. Hold on, let me see. We're not 160 yet. Although I will genuinely send you coffee money if we do reach 160. To be honest, I think I'm going to lose my coffee money there. I think you are going to win this one. But I suppose now we're here, we could talk about the yen and the dollar. Well, actually, I don't really think we need to speak about the dollar because we just did briefly. But we've got I can't remember exactly how. Is it like 1.2 trillion stimulus in Japan, something like that? Clearly not helping the yen. However, we do have rate hike talks coming in. There's a talk of intervention. So we spoke about interventions last time I was on, and I said I covered it again quite briefly, but I basically said that one of my old friends that has a fund in London managed to time the one of the previous interventions last year. And I was explaining how he did it because it was basically a time when the US was on holiday. And I forgot to basically just summarize that and say we can expect MOF interventions, which is Ministry of Finance, to intervene in low liquidity periods. And the reason that happens, or the reason they do that, is because if there's less liquidity in the market, their intervention is going to be more impactful on price. So it's going to do their job, but better. Does that make sense? So what we could expect, we do have a US holiday coming, I think. Is it Thursday, Friday? I know there's no stream. I think it's Thursday and Friday. We've got a US holiday. So it could be then. I'm not saying it is. I don't know. There's no guarantees. But if you are involved in the yen on Thursday and Friday, just keep an eye out. Just make sure you're protected on those yen pairs if you're involved. Because again, they like to do it in low liquidity periods, which a US holiday is a significantly low liquidity time. Grown ass kid, hello, how you doing? Any thoughts on pound Swiss? Yeah, I'll move on to pound Swiss in a second. Fear and greed index is at an extreme low. Do you mean extreme fear or extreme greed? I think you mean fear. I'm fairly sure I saw it at extreme fear a few days ago. Oh, it is it? Yeah. Okay. Yeah, yeah, it's extreme fear. Yeah, I mean, I'm not too bothered, to be honest. With Nasdaq, S&P, Dow. Well, not Dow, actually. I'm going to stick with S&P and Nasdaq. Unless there is a catalyst. So something like, I don't know, let's say it's some big war, a pandemic like COVID, a financial crash, or even the AI bubble popping. Unless there's some major catalyst, I don't really see a reason to be bearish, to be perfectly honest with you. So as things stand right now, yes, the Fed is cutting rates. That's a nice positive for the market. But yeah, I mean, why would we be fearful? Prices are high, yes, sure, relative to previous prices, of course. But that's, in my opinion, that's not even worthwhile, or it's not even a worthwhile argument. Better call MOF. Yeah, no, might stack, not stack option shorts. That's the wrong word. I might go short dollar yen on Thursday and just see. I'm not going to do that, by the way. That was impulsive thought. You know, when you get those periods, or not periods, that's the wrong word. You get those times as a trader where you're like, oh, if I had an infinite cash supply, maybe just a quick gamble on that would be quite a nice, quite a nice idea. Oops. Sorry, I just knocked my mic. I'm not sure if you guys heard that. No coffee money. Send them an actual coffee made with my hands. Yeah, okay, sure. Why do you flood the chat with sales links? You're on the wrong channel. And also, there's no sales links. Well, there is, I guess, but it's one of those things. So on this channel, and I'm fairly sure that A1 guys won't mind me saying this because they're open about it as well, but there's a payoff for everything. You know, as they say, nothing is free. This stream is completely free. The only payoff is that obviously there's products for sale. You know, that's what it is. It's the same with TV. In the UK, at least, you pretty much get television for free, but the payoff is obviously pay ads because it's paid for by the government. You have to watch the ads. Same with Spotify. If you don't pay for Spotify, you've got to listen to ads. It's the same principle. I don't see any problem with that whatsoever. If the effort is going into hosting the stream, getting the guests, providing quality content, sure. Try and sell something at the same time, make some money off it. Why not? The extreme fear is bullish, in my opinion, too. It was that level before it skyrocketed. Yeah, I mean, it generally is. Contrarian position in the markets is, in my opinion, one of the most powerful things you can do. Obviously, when you do it informed, if you're doing it blindly, then probably it's not going to work. But if you've got a reason to be a buyer, but everyone else is fearful, or generally everyone else is fearful, it's a great time to be a buyer. I follow that principle pretty much everywhere, not necessarily in FX because I deal with FX in a slightly different way, but specifically on indices and on commodities as well. I think it's a great thing to do, is be contrarian. Dow Jones, insane reversal. We've just we had the market open, didn't we? Let's see what's happened. TradingView needs to chill with the ads. I've cancelled my TradingView subscription a few days ago. So I only use TradingView for videos and content and things. And it's filled with ads. It's horrible. It's like a dodgy pop-up site. Anyway, yeah, Dow's taking a hit here. Let's see. Has the S&P done the same thing? Yeah, it seems markets are down on the open. Yeah, which is, what was that? Oh, FTSE. Yeah. I'm not in this position, by the way. Pound Aussie. Oh, sorry. Said pound Swiss earlier. Never got around to that. So yeah, pound Aussie, pound Swiss. Let's cover those ones. So the sterling has displayed pretty good strength actually over the past couple of days, as we've seen a little bit of risk on appeal. I am still bearish. There's no way around it. I'm actually building up a short position on pound Swiss. Excuse me. But yeah, I think obviously for the way I trade, or the way I'm trading this specifically, the price movements don't matter too much because I'm just selling as we come higher. Obviously in a structured way, it's not a full margin approach, but yeah, I think overall the pound is going to get hammered. Now, the big sort of thing for that, when I say hammered, I don't mean we're going to see just a massive drop off a cliff on pound asset or pound pairs. I think it's more going to be a slow bleed out over time, and we're going to see the pound start trending lower, specifically against other majors. So things like the Aussie dollar, pound dollar, Swiss. So I've got no concern with that. But short term, I don't think now is the time to be selling. If you are a bear, or if you're a bull, that's different, obviously. But for bears, I don't think now is the right time. I think you would really want to start waiting for these higher price levels to get hit. Because right now we've very clearly got buying interest. Fundamentally, though, the pound, or on a macro view anyway, the UK economy is in a very, very poor spot. Fairly sure, actually, we've got yeah, we do. So pound CAD, pound dollar, and pound Australian dollar reading bearish as well. So let's have a look. Pound Australian dollar specifically. I'm going to go to the daily. So I'm actually currently looking to go short at some point. So I was looking first of all at this gap because it lined up really nicely with the fib. Clearly that's been broken, so it's not really in play as much at the moment. But if we can start seeing some sort of reversal within this level between the 0.5 and the 0.618, I might try to get short. But yeah, overall, it's more a case of just trying to nail that entry right now, because so far everything's there. We've got a really nice high, lower high, and potentially lower high here. Obviously lower low and lower low here. And we've got, oops, sorry, 1 second. And we've got the edge finder reading down here with a -12. So all of those, all of the dominoes are lining up. But yeah, as I said, it's just a case now of waiting for the entry point. Pound Swiss, sorry, again, I completely forgot. I'll touch on this one very quickly, but it's basically the same idea. It's more a case of just waiting to see, can we get some sort of entry at levels of structure? So whether it be here and we see the sort of break and retest pattern, or we come slightly higher and potentially retest, or not retest, but come up and reject this 200 moving average, then come lower. Either of these situations, in my opinion, make a lot of sense. But yeah, I'm not really interested which one plays out because, again, I'm sort of DCAing shorts, which is annoying. What you need to keep in mind with specifically Pound Swiss, actually, is the swaps for holding shorts are quite expensive because the S&P's interest rate is 0. The Bank of England is at 4%. So the swap fees are a little bit expensive. So yeah, you don't want to be holding shorts on Pound Swiss unnecessarily because, again, you are going to be paying through the nose for those. Trading View being 80% off, burn my eyes. Yeah, I know. I mean, credit to the marketing team, but yeah, I mean, I'm one of those people. If I get marketed to for something I'm not interested in too much, it's going to annoy me. So I will never end up buying it because now you've annoyed me. I know that's really, really stubborn and quite childish, but it's just the way it is. So if I see things online that I was thinking about buying and they start pushing ads to me, it's like I'm probably not going to buy it now. Actually, it's like I don't want to feel forced into something. You know, I'm a free man. Marco, why NAS dropping at the same time as gold, falling dollar? First of all, I'm not Marco. My name's James. So actually, that's a good question. Let's have a look. I've not paid any attention to gold. Let's see what's going on there. So yeah, gold's down, dollar down as well. So it's not really a case of one-to-one. So with correlation, specifically with the XAU USD and the USD or the DXY correlation, it isn't a one-to-one pair where the dollar's down, gold has got to be up, or vice versa. So I don't think there's any specific reason for gold down right now. I don't think there's like a macro reason or an economic or fundamental reason. I think it's just price doing what it does, you know. And we just had New York open as well. Something else, actually, just while it's on my mind, don't forget, we're actually coming into a very low probability. I'm saying that generally. I don't know what you trade or how you trade, but generally speaking, a low probability period as we are approaching Christmas. So generally, my rule is I stop trading around the second week of December, and I'll come back after the first week of January. That does vary. Obviously, I do pay attention to the markets. If I see volatility and liquidity is still there, I'll be involved. But again, general rule is sort of I take that period away from the markets because I just don't see any reason trying to trade. You're behind on stream, Roop. I'm not sure what that means, Josh. Oh, you're behind on stream? Yeah, no problem at all. Ukraine, that's also a good point. Yes, the Ukraine thing or Ukraine peace deal with Russia will obviously add a little bit of bearish pressure. Although I'm fairly sure that didn't Ukraine deny that deal, or am I behind? Has there been a new one? So I'm fairly sure, was it last week or a few days ago? It wasn't long ago that I saw a Bloomberg notification that Zelensky denied the deal. Anyway, let's see what else we've got. So we've spoken about yen. We've spoken about the indices. Metals, I don't really have much going on for the metals, to be honest with you. So silver, I'm actually building up a position. It's a long-term idea, but there is nothing really there for me. So really what we've seen is consolidation, breakout, back into consolidation. So for me, there is no way to trade this. I think this low here could have been sort of the only buying opportunity I had. Maybe here, but obviously I'm sort of hindsight, perfect ideas. But yeah, as things stand right now, there is no way for me to really get into gold or silver. Copper's getting, wait, did I see copper? Yeah, copper's getting a very bullish reading, which is nice. Now, I think I've had 1 or 2 positions in copper in my entire trading career. It's not something that I really pay any attention to, but it's the same situation really as gold and silver. We're kind of just stuck in this sideways range. I don't see any way to really trade this just yet. If we could see a breakout and continue higher, then yes, maybe. Or if we come back down into these lows, maybe that could be an opportunity to buy support. But yeah, that's pretty much all I see at the moment. Aussie US dollar, yeah, we can have a look. GU's pushing pretty hard. Yeah, I mean, the data for the US that we got out earlier was pretty negative, so I assume the New York desks will be pushing in some orders on the back of that. Wait, what did we want? Australian US dollar. So we'll do Aussie US dollar last because my time is almost up. Okay, so let's have a think. I would be inclined to actually be a buyer of Aussie US dollar. Now, I know that the trend is bearish, which is a bit of a problem for me. Obviously, we've got these moving averages trending to the downside. We've got these lower highs getting formed. So technically, it's not great. This is a little bit of a low quality setup, if you will. But I think buying off this this level could be quite fruitful. And the reason that I would be looking to buy and not sell is because we've got a relatively hawkish RBA and we've got the Fed that is expected to cut in December. So that gives us what we call a central bank divergence, which is quite nice. So basically, if we've got the RBA that's either holding rates or hiking rates, and we've got the Fed that is cutting rates, then we've got that yield gap. So I think the long positions could be a good idea, but I don't know if now is a great time. Obviously, you need to wait for maybe a catalyst, which obviously a catalyst could be something to reinforce that hawkish RBA, something to reinforce a dovish Fed, something to happen to then warrant you entering that position and confirming the direction or the thesis. And that's what we call catalyst trading. However, I'm going to do the counterpoint, because if we do end up continuing this bearish trend, we come back up, retest through the 200 moving average, confirm a rejection, then technical traders might want to actually just be short. Obviously, if you're not accounting for fundamentals, the technicals are bearish in my opinion here. So yeah, it's a little bit of a tricky one. We've got, again, technicals bearish. In my opinion, the fundamentals are relatively bullish. So it's kind of pulling me both ways there. Anyway, ladies and gentlemen, I'm going to call it a day. I hope you all enjoy the rest of your days, and I'll speak to you tomorrow. I think I'm on tomorrow. So yeah, stay safe, don't get margin called, and yeah, have a good time.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.